Hi, today is May 8, 2025, 6:22 p.m. Japan time. Since tomorrow is the May SQ day, I'd like to quickly review the Nikkei today and the US market from yesterday. The Nikkei closed at 36,929 yen, up about 0.4% from the previous day. Momentum is clearly coming back, and the volatility index fell from 29.85 yesterday to 28.13 today. And I was being cautious, but at this point, I really feel we are back in a risk market. The bond market is calm in both Japan and the US, and it seems like we moved past the shock of Trump tariff announcement. I thought we might see another drop, but the model from I follow has proven to be right. This is a recovery phase. It is possible that we return to a range of 38,000 and 40,000 or even break higher. Overall, I think the market has normalized and recovered from the panic phase. We need to stay alert, of course, but now seems like a good time to target upside opportunities. Gold is still hovering at a high level, and Bitcoin is directionless for now, but clearly we haven't entered a real breakdown phase. If the May SQ ends below the April SQ, and could signal a real recession pricing in. But looking at the future right now, about 37,2020 yen, I don't think we'll drop by 5,000 yen overnight. So chances are well close above the last SQ, which I take as a sign of recovery. Yes, that's still negotiation around Trump tariff, but I think the market has already processed it. Look ahead, Japan will have a upper house election, and globally we have a G7 financial ministers meeting in late May, and the G7 summit is mid-June. Considering these events, I think it's going to be hard for the market to go down significantly. Politically, this is likely to be an upward phase. If we break out higher, I expect it to happen around the June major SQ. I mentioned before that we might target 42,000 yen, and now I think that's still a valid scenario. So I plan to hold on to that idea and stay focused. That said, I still believe the economy itself is weakening, so we need to carefully watch EPS and stay flexible. Ride the bullish wave, but know when to get off. A while back, I struggled between following the model or the cycle, but now I'm convinced the model was right. In Japan, bond yield has stabilized and the volatility index is down. I think this is a good environment to buy a dip while staying cautious. Looking at the US, the S&P closed at 5631 and its VIX dropped to 23.55. The PER seems to have dropped and the EPS is now around $210. I'm not 100% sure these numbers are accurate yet, but it feels like APS has suddenly risen, which might be supporting the index. Also, the MOVE index fell below as 100, now at 99, showing bond volatility is calming in the US too. In the environment, people are buying both stock and gold. Long gold as a hedge while staying a risk on with equities. That's the kind of market we're in. About Trump tariffs, I personally think they are stay in place, but they are tightening dollar supply, so we might see something like the project could again. But right now, I don't see a real push toward yen appreciation. The weak yen is probably going to continue, which might be favorable for Japanese export industries. Some companies that benefit from strong yen, like Power Group, did well before, but lately they've lost momentum. So capital is not really flowing into the yen-strong players anymore. Export-oriented companies are clearly in favor. As always, history repeats, but not in the same way, so we need to stay sharp. To sum up, we are risk on, and with elections and the global meeting ahead, I think we can stay bullish into June's SQ. Even though Trump market is unpredictable, everyone understands that now. We even have the 72-hour rule for his move, and does knowledge reduce panic reactions. Also, the U.S. debut selling chicken rice seems to have resolved, as I've been saying since February. So, all in all, it feels like bullish pressure is back. That's it for today. If you enjoyed this, please consider following the show. See you tomorrow.